Good morning, and thanks so much for tuning into the Trade Setup. I'm Neeraj Shah, and it promises to be an interesting week of trade simply because the belief is that there might be a bit of a recovery that we might see sometime during this week. But first, let's take stock of the global news flow. So, the stocks in the US essentially closed lower after hot inflation data. Major averages logged the worst weeks in 2023, and that tells you a story or two about how the world was positioned. So that's part one. Treasury yields, of course, rose after Fed's preferred inflation gauge showed larger than expected increase. Gold slipped further as rate hike bets boosted the US dollar as well as yields. And we might very well see India to log in fourth quarter growth slowdown due to base effects come tomorrow. Tomorrow is the day when we hear or when we see the GDP data come out, and it might be interesting to see how that data shapes up. So I think one eye will be on what the growth slowdown number is like in India. Now, indeed, of course, I doubt that will happen really, but you don't know if indeed growth slowdown pangs make the street believe that the Reserve Bank of India will actually make a pivot. I doubt that it is so easy to do that, but it's an important number to monitor. So bear that at the back of your mind. Um, well, let's try and then therefore take stock of what the markets did. And the U.S. markets in Friday's session had a tough day. The futures aren't exactly gung ho either, and the other cues, which is the 10-year yield or the dollar index, etc., all of them are at elevated levels. The 10-year yield, of course, is steady at 3.93, but the dollar index at 105 has certainly inched up even further. Volatility is okay, but I would suspect that in such a setup, it's very difficult to get a breakout move of any sorts. The SGX Nifty trades with a cut of zero point 0.1, but effectively it is fairly flat. And this might well be because, from a trader's perspective, we are very trading, as I said, very close to a cluster of supports, which will, and therefore that's the trade setup for the day. Really, that high inflation and rates could now start dominating discussions in markets for yet another quarter at least. The limited point I'm trying to make is don't be under the belief that once the inflation data is out, the conversation is over. Now we've seen, by virtue of the data that has come out, that it is staying true for a better part of the next one quarter at the very least. And therefore, that is a bit of an overhang that the markets have at the very least. The Nifty is trading though as we've now said thrice on this conversation thus far, a set of support 17,350, 400, and therefore it's a critical make or break level for a bounce, which might also tempt traders to not come out and execute some fairly large shorts on the index because of the possibility of this bounce. I've been saying the whole of last week as well that quant indicators are any which is indicating that the risk reward is favorable. So the two or three quant indicators that I look at, and all of them kind of indicating that this might be places from where we might see a bounce. So let's wait and watch. The only issue is that if you're parked in the wrong sectors, and currently globally exposed as well as interest rate sensitives are the ones which are the most vulnerable. I mean, just look at what metals did in Friday's session as well, right? I mean, Hindalco, Nalco, Vedanta, JSW Steel, all of these had some pretty difficult price volume action. Hindalco was down about 5%. The volumes were about 2.5 times the weekly average. Or Nalco, wherein down 4.6%, and the volumes were about 1.91 times weekly average. Or Vedanta, JSW Steel, you name it. Clearly, globally exposed metals didn't do well. IT is a different kettle of fish. There, the strong US data actually helps. Otherwise, the demand scenario not that strong, clearly leading to metals not looking all that great. And of course, the dollar index uptick by itself becomes a bit of a negative. Now, in such a scenario, what are the stocks to monitor in the session today? Of course, I'm watching out for Paytm because, as per sources to Bloomberg, Sunil Mittal is seeking a stake in the company. He may, it's apparently believed that he may fold Airtel Payments Bank into Paytm Payments Bank in a stock deal, and is also seeking to buy Paytm shares from other holders. Though they do say that the talks are in early stages and Airtel and Paytm may not even reach a deal. So you never know. But this should keep Paytm as a stock excited in the session today, I believe. So do watch out for this one. Adani Ports has crossed the 300 million tons of cargo handling in 329 days till Feb 23rd. Now, first a standard disclaimer that the Adani Group is in the process of acquiring 49% stake in Pitilin Business Media, which is the owner of the platform that you're watching. The point about this one, viewers, is that while it's a better than expected, better than the YOY performance, now if they do 1 million tons a day, that is when they reach the lower end of the 335 million tons guidance, which they had suggested on the investor call in the last few investor calls. So now is the litmus test. Q4 typically is a higher GDP or higher growth period. A lot of orders get ordered, executed, what have you, um, and therefore remains to be seen if indeed the volumes pick up in what is arguably looking like a slowing growth scenario for the world. But if they do about 1 million tons a day, then they reach the lower end of the guidance, which is something that the street will take heart from. And then, of course, it all depends on macros. Can they reach 400 in FY24, or does it spill over to FY25? All of that. Newspapers are today reporting that Adani Ports is in the process of raising some debt against its Australian port assets as well. So lots happening within what this group is doing. Keep in mind, they're also doing a road show for the fixed income investors in Singapore and Hong Kong for the next 3 days. So could be a fairly choppy period for some of these stocks. Be careful if you're trading them. Uh, uh, they could be volatile, so just be mindful of that. Then SpiceJet, company's board will meet today to consider the issue of shares on a preferential basis and raising fresh capital through the issue of eligible securities to QIPs. This was supposed to happen on 24th, now happening today. Announcements around this might keep the stock excited, so to be monitored. And Edelweiss Financial Services, it gets the shareholders nod to spin off the wealth business, so that could be in focus as well. And some brokerage notes, one trading and a couple of investment led. If we can actually get, okay, let's start with BOFA and FinTech. They say that the latest shareholdings of some of these fintech companies indicates that there is adequate supply still, leading to a continued overhang on these names. Remember, the issue for most of these started amongst, aside of higher interest rates, also when lock-in periods got over and large shareholders came to sell their stock, and that put pressure on these stocks. Now, BOFA research indicates that the large supply overhang still left. They believe that, ironically, the better performing stocks may actually see blocks, as investors would like to cash in where the demand is high. The non-promoter stake, there is adequate supply from the likes of SoftBank, Alibaba, and Tencent. And according to their analysis, Nykaa now has the smallest non-promoter stake from pre-IPO investors, which is close to about 11%. Relative to the others, this is the lowest, and maybe that's a bit of a shot in the arm for Nykaa. At some point of time, the supply overhang will go away as well, quicker than maybe some of the others. But you never know, Paytm could be in the draw as well for absorbing large quantums of sales uh, from the existing shareholders, simply because the stock has been on a bit of a roll with the results that came out. And now, if indeed today this news is true, and if Sunil Bharti Mittal is absorbing some of that supply as well, well, it could be actually pretty good. And Jefferies just come out with a note on real estate, which is the most hated sector currently, maybe rightly so. And they are saying that valuations are now at pre-RERA levels, which are ignoring the much improved sector discipline. The housing cycle is still in the early period, the third year of a typically long 6 to 8 year cycle. Developers with valuations at or below average include Lodha, Godrej Properties, Piramal and Peninsula, and DLF. And they believe that post the larger correction seen for residential developers, which is Godrej Properties and Lodha, versus mixed-use developers like DLF and Oberoi, they continue to favor the former, which is the likes of Godrej Properties and Lodha. The key point is that they are saying that valuations are pre-RERA reform levels, and we know that RERA has had some impact on the real estate sector, and there has been consolidation which should aid the larger companies as well. But in an adverse interest rate cycle, some of these arguments might not find merit as of now, but never know. Who knows? It is at its worst pessimism that sectors reach the bottom. I'm not saying it's reached the bottom. I'm just saying that there are analysts who believe that we are very close to that, maybe very close to that. Let's wait and watch. Lastly, a trading recommendation from EMKAY Alternative on Britannia. They believe that they say that they observed that the stock has increased by almost 22% in the past 6 months versus 6% increase in the Nifty FMCG index. I believe the stock has witnessed long unwinding in the past fortnight and breached its 20-day moving average in the downward direction with a declining RSI, which should probably lead to more downside. They believe the stock will likely see pressure till 4230, which is about 4.8 percentage points lower than the current price. So do watch out for Britannia from a trading perspective. Well, viewers, that's the long and short of the trade setup today. Multiple things to monitor. The global markets are not the most conducive for a long trade currently. And we've seen globally exposed sectors like metals crack, as we described here. The Adani Group has multiple news flow around it, including the fact that there is a fixed income investor roadshow for the next 3 days. And therefore, the stocks could be in the high frequency zone. So be mindful of that. And there is some bit of news flow around SpiceJet anticipated today. So that is a stock to monitor too. And don't forget Paytm, arguably the stock of the morning today. Let's see if indeed this name invokes some reaction. Though they've said that the deal may not even reach any conclusion. And that is what their sources have told them. Of course, it's not company-specific information or company-specific information. And therefore, you don't know what kind of excitement comes about in that stock. But watch out. If it is excited, it's on the back of this news. Thanks so much for tuning in today. Have a great day ahead. And of course, keep in mind, sorry, I forgot about this completely. Two things that we wanted to tell you. One is that Mr. Nilesh Shah of Kotak Mahindra AMC would be talking to us today. And it'll be lovely to understand from him the impact of the macroeconomic indicators on the micro, which is the equity markets. And as we wrap up trade setup, hear out a very special conversation that will come up tomorrow. It's a chat that we had with Ramesh Tamani, and that is slated to come up tomorrow. Hear out a small slice of this conversation.
You need to be invested in this country. That's the first rule. I think over a 10-year period, okay, the Sensex is always delivered positive returns. Okay, it can be very volatile over a quarter, very volatile over a year, very volatile over maybe a couple of years. But if you remain invested in high quality businesses, I don't think there's a 10-year rolling period in which you could have lost money in the Sensex. So the first rule is you remain invested. Now, what do you invest in? That's a more difficult and more challenging question.